Welcome to our weekend update where we like to go into the bigger time frames, but I think that today we are going to go into those weekly expected moves. So be ready to go into the bigger time frames for a brief moment at the beginning of this video, and then we're going to go into the 2-hour and 30-minute chart and really give you guys some analysis for the potential moves in the week ahead, what signals they're overall suggesting. Now, it was a good week to be a part of Patreon, especially towards the end of the week, towards Thursday and Friday, as we started to prepare for volatility, because volatility was overall suggesting it would go up, but towards the end of the week, we started to see some reversal signals. So we are going to point that out first in this video, and then we'll go over the SPY and the Qs. But first, I wanted to touch on the VIX and tell you guys what we were talking about over on Patreon. So let's get into it. Now, the SPY has confirmed some solid divergence here. We have seen that confirmation for the daily time frame, but we were overall talking about on volatility. What have we been talking about here as far as the daily scale goes for a while, right? We're going into the daily time frames kind of first here for volatility, but we are going to go into the shorter ones to discuss what we were talking about, especially with our update on Friday. But we are overall just going, there's a lot of daily divergence, so we are very likely to get some kind of weekly pop here for volatility. But a lot of the time, they like to squeeze this out in this area for as long as possible. I want to bring you back to moments in time where we did see pops in the market for volatility. And you'll notice that we have these weeks and weeks before where you just kind of go in an area, right? That happens a lot of the time. And you'll probably notice here that we've been weeks and weeks in this area. And so we're still waiting for the potential thing that drops us down. Now, we discussed trap number two confirming, and we're going to go over that in the shorter time frames, but we started to talk about a trap number 3. Why did we do that? And this is what we were discussing on Patreon. Well, look at the daily. If this signal was going to get ruined, what has to happen? Well, the daily chart, the daily MACD has to confirm down and go negative. And look how close that is to going negative. So if we were going to see some kind of inflation, FOMO, crazy, weird, wild moment where we don't get a weekly pullback, but instead go up for a few more weeks, well, this daily chart would have to cross down and we'd have to violate all these points, correct? And we saw a signal that could do that. Now, I'm not leaning towards that happening. I'm still leaning towards the weekly pullback. Don't think that the probabilities there have really changed. But when you see signals like this, you have to react, especially if you're risking money and you care about that money, because we like to look at 2-hour charts. If you didn't know, I've researched 2-hour charts very thoroughly, and 2-hour charts can be a good sign, a good time frame to watch if you're looking for hints if the daily is about to get a pullback, if the daily is about to turn in the downward or upward direction. It's very good. They really play off of each other. But we saw this 2-hour divergence, okay? And this is what we were really talking about. We said if that 2-hour divergence is able to confirm, and it did confirm, then that would suggest that volatility is positioning itself with the weakness and momentum to actually turn in the downward direction. And that downturn, because it is on the 2-hour chart right here at the top left, because it is on the 2-hour chart and you have a 2-hour MACD divergence and you have that 2-hour RSI divergence, even giving you a little one here, that means that the daily chart can cross down here. Now, this could potentially create a higher low. This hasn't really crossed down yet, so we're gonna see if it can create another divergence point maybe, right? We'll be looking for those things. But while it is turned down, there's always the possibility that this crashes down to 12.12 and violates all divergence. That's this signal. That's why we were talking about it very seriously. That's why I even said I'm taking a lot of profit on my volatility calls because of this signal. Not all of it, right? Because it's a longer extended out, but I'm still going to take profit while the profit's there. And if I see a reversal signal that is completely against my trade, then I take profit on a decent amount, okay? So the 2-hour chart here is suggesting the daily can cross down. That's risky. That means we have the chance to squeeze. Even though I'm not leaning towards that, I'm going to treat my money very carefully. Now, during this time, we actually were talking even closer. We were giving even closer hints than this because 30-minute charts show a lot of the analysis in 30-minute charts you can use to see, hey, am I getting some hints that the 2-hour is going to cross down? And you did get those hints. Now, we mentioned this first divergence. We went and created another one. We went and created another point right here. But before we cross down, all the things that we pay attention to happen for volatility. So how can we look at this when we go over to the SPY? Now, the SPY has confirmed on the daily, right? We're going to do these bigger time frames first. On the daily time frame has confirmed the divergence again, right? We see this divergence point. We're holding still the main point of that divergence. So a lot of people probably saying multiple point, and I would have to agree with them because the MACD divergence is so nice here. It still is very nice. We violate one small point. We have the other two. That's very, very good. So we have the good confirmation with the price. So what did we discuss on Patreon? We discussed, hey, we're either going to retest this or we're going to go for one more move to the upside because as of right now, the daily is saying we need more of a pullback than this. Okay, it's saying we at least probably need to pull down into that weekly expected move or something like that, but we'll pay attention to that in the shorter time frames. For now, all you need to know about the daily scale is, yes, the daily has crossed down. If that crosses back up, you don't necessarily want to be saying that the market is going to keep crashing down at this point. So the distance between the MACD and the center line is still big. If we need to make some kind of little divergence right here, right, we can leak this out into what? September 30th. And you're seeing it start to be like, oh my gosh, this is going to leak out into September 30th. So isn't that very interesting? So we're going to come back to the SPY in a moment, so make sure to stick with us. We are going to just pop over to the Qs because the Qs were a very interesting standpoint here. The Qs completely violated the divergence on the RSI. This is why we're suggesting that we might need to remake signals on the Qs and we might need to look for a trap number 3, a bull trap number 3. That would be bull trap number 2 was right here. Bull trap number 3 could be all the way up here towards next week. So not even this week, but next week. So what we're watching here is, yes, it held all of the points really for the MACD, but we violated on the RSI. So we might need to at least see a little divergence here. We might need to go through a daily pullback, then get a reversal, then see it cross down, right? This can take a lot of time according to the Q signals. Why could it take a lot of time? Well, if you look at the positioning here, it's not necessarily at the super, super risky spot. Now, we've seen bad things happen before, but if you come back to these type of times, right, we come back into like these times where you see a roll into negative territory, look how close you end up getting to the center line before you actually do it. So you're at a level of 2.59, whereas this MACD right now is at 6.5. So it's not really in the range of like, oh, this is super risky. Now, I'm still leaning towards a weekly pullback. I just think we're going to see some tomfoolery up into maybe September 30th, and why not leak it out into the first expiration of the month being October 3rd. So this will be a big deal going forward, but for now, the Qs, if you notice, did not confirm the MACD to the downside. So the momentum is still saying up, up, up. So we're going to get into those shorter timeframes for the SPY and the Qs now. That way you guys can understand maybe some things or pay attention to some very high probability things for the week ahead, some high probable moves using the weekly expected moves. Let's go back over to the SPY real quick and get into those shorter time frames. We were able to go through the big ones. Let's go over the smaller ones. Now, on the weekend, I do believe more people have time to watch videos and some new people come around. So I wanted to explain what these lines are on the chart. You see that these lines all coincide with each other, right, with a certain color. So each line has the same probabilities. I'm just going to talk about the purple one. So you see 671.25 for the weekly expected move. That would be in purple. And you get 652.39 to the downside. Now, what this is this is a 68% zone that is calculated using the options data, right? So I use the options data to calculate a 68% zone with a 32% chance to land outside of that zone every single week. So by Friday close, 68% chance to close in here, 32% chance to close outside of it. And at the same time, if you wanted another fun little stat, these weekly expected moves, as far as it goes, the weekly expected moves is what this stat is for. I haven't done it with the dailies, but I really assume, because I've said this before, what you see on shorter time frames is what you see on bigger time frames. So the same things that you pay attention to on shorter time frames is the same thing you'll pay attention to on bigger time frames. 30-minute divergence means 30-minute divergence, right? It means a reversal is possible on that time frame. And then a daily divergence is the same, right? So these probabilities could be the same here. That means that 75% of the time you will see a weekly expected move touched, either the upside or the downside. So what we need to do is figure out, hey, which side are we going to touch? Well, that's where we can pay attention to these 2-hour charts, right? If the 2 hour is able to confirm above that 5-day moving average, what do you think it is more likely to do, right? Just use your critical thinking skills for a sec. Which purple line do you think we are very likely to get to? If you see a strong green bar right here and it confirms just like that, since it's green, we'll just leave it. You see a strong green bar like that. Which way do you think that we are very highly probable to go? Well, and you can use your other skills too. The RSI just crossed the signal line and crossed the center line. The MACD, if that's able to cross up, it would be where? In positive territory. The price action would be taking you back above the 5. This would tell us that we are very highly probable, if we get a 2-hour confirmation early on next week, that we can go to 671.25. I really wanted to break that down this weekend so maybe some new people could fully understand what we're saying here. Now, as far as it stands, if that 2-hour doesn't cross up, what's going on? Well, the 30-minute chart might be rotating down. So there is a few things to talk about with this 30-minute chart that we have to go through. Right now, we are retesting that 5. This is what we talked about over on Patreon on Friday. Either we are going to bounce up with the little divergence in here, and we're going to bounce up and test that 5 and reject and sell off, or we're going to see that 2-hour cross up and we're going to go make a new high. That's really what we thought was going on here. But if we look at this MACD and we see how it's still close to the center line, we look at the deepness of it, we look at the deepness of this RSI read, and we look where that weekly expected move is. I want you to imagine that we made a divergence here, or imagine this line. If we got to it and we bounced and a 30-minute MACD confirmed, what would be showing right here? Well, a 30-minute divergence, right? We would potentially look like this. Uh-oh. If there's a 30-minute divergence, what is highly probable to happen? Well, the 2-hour is likely to curl up. So this is something that I would really be watching for next week. If we sell off and it's really dramatic and early on in the week, we come down into here and you see us like slightly through that weekly expected move on Monday or Tuesday, and you go, oh my gosh, the market's going to sell off. Yes, it can. But you also have a 68% chance to close back in where? Back in this zone by Friday. So if you come outside of this early on in the week and you see a bounce that confirms, and it not only confirms like a regular move, but it confirms a divergence on the MACD, it confirms a divergence on the SPY, you have to say that we are very likely getting some kind of 2-hour bounce. And if you were going to say that the market was going to come back up to these highs and you saw a divergence here, if you saw that 2-hour going to cross, do you think it's highly probable that we could go test this high, go make a new one? It is. That's why I wanted to seriously bring this up today. Now, what do we need to see in order to not get a big move like that, in order for this divergence not to matter, if it would even form, right? We're just talking about some ideas, how we can utilize our weekly expected moves. Well, if this 30-minute confirms, then that would be bad. But what do we want? We want it to violate divergence. We want it to break down completely through it. We want it to violate on the MACD. We want it to violate on the RSI, then get some kind of bounce. And then we'll go down to deeper levels to actually get a 2-hour trend move. So the reason you want this, and then you get the 2-hour bounce later, the reason you want this is because the MACD for the 2-hour would be extremely negative. You would know you're in a negative trend. As of right now, if the 2-hour curls up by that center line, you have to be prepared for what? Testing the high, going to make a new one. This is the same thing that we see all the time around this little 2-hour place, right? The last time that we did see a very similar thing to this was right here. Right in this area, we saw a 2-hour that kind of went negative, right? It went negative a little bit, but then what popped up down here? 30-minute divergence for the SPY, and I believe 30-minute divergence for the Qs popped up here too. We crossed up, and even with all these divergences, the market didn't turn down. So this is another one of those times, if we make divergence by the weekly expected move, be prepared and be paying attention to signals, and maybe be a part of Patreon, because on Patreon, we'll give you new updated monthly expected moves. We'll give you weekly expected moves for all the stocks over here that we like to chat about sometimes. And we're actually going to be putting out new monthly expected moves, and we'll be talking about these things more throughout the day so you can react in real time. The link is down in the description if you would like to join. Let's go over to the Qs and look what's going on there. You know how we like to do it. We're a little bit more extensive with the SPY, and then we'll kind of condense it a little bit for the Qs here. First of all, let's talk about something different real quick for anyone that's new. This yellow line is your monthly expected move. That's going to change this week, so join Patreon if you want those monthly expected moves, okay? But we do give them out for free here for the SPY and the Qs, so thank you for subscribing. I appreciate it, and we just want to be helpful, all right? The 2-hour MACD, let's just do that real quick. Hey, it's by that center line, isn't it? Is that negative? So are we really selling off right now? Well, we are seeing somewhat of a sell-off, but is it big enough to really cause some kind of absolute turmoil? No, we're going to have to see more next week to be like, yeah, this is really bad. This is still positive. This could just be a 2-hour pullback. Look at this. Look at this guy. Pulled back, went up. pulled back, went up, right? So this doesn't have to be anything too terrible, right? So what we're really watching for here is if the 2 hour confirms, where would it go? Well, that's where our weekly expected moves, our 68% zones come into play. 607.33 to the upside. We have 584.61 to the downside. For the Qs, by the way, the daily expected moves are in red. I don't know if we listed those off for the SPY. Just go back and pause it. The red lines are the daily expected moves for Monday, but that would be for the Qs 599.49 to the upside and 592.45 to the downside. Okay, so this is really just shaping up to what? Well, if that 2 hour curls up, where's it going? Well, most likely 607.33 with a 75% chance if that curls up. Or it could fail, right? These things fail. We'll talk about that as it comes. But the 2 hour MACD, very simply, if that would curl up, what happens? Well, if you get that strong green bar like this, what do you think? Is it more likely to go to this line or this line? It's more likely to go to this line. And since we tag them 75% of the time, it's very easy to say, we'll probably test this high or go make a new one. And that new one could be around 607.33. Very, very simple there. But we haven't taken back that 5-day and we're still by the center line for the Qs. So this looks very consolidative and it looks like it might have even been getting a little bit tighter. You kind of see this getting a little tighter. So what if we fall through that? Well, on Monday, not a lot of implied volatility. So this means you can see something surprising. And it would be very nice to just see that quick surprising thing now, create that divergence point, because then I can make a simple video about this on Patreon and we can all be paying attention to it. And it's a very simple trade for a plan for if it goes right and a plan for if it goes wrong, right? The things you need to set up a trade would be very, very simple if the Qs are just able to make a quick little divergence down by the weekly expected move. I think that would really tell us, hey, the 2 hour move, 2 hours is going to get a move up. We'll look for a 2 hour lower high. We'll look for a 2 hour divergence again because this market is very resilient. So that's all we're looking for here. That is something that I'm paying attention to, but we don't necessarily have to do that. We can do higher lows and all that good stuff. But if you want a sell-off to really continue here, you potentially might want even more bait towards this upside. You might want a fake out. You might want a 2 hour cross up that fakes out. But for now, you would say, hey, what do we need to do to sell off? We need to reject off of the 5. We need to break through this weekly expected move, and we need to wipe out any chance of divergences down on the MACD or down on the RSI. So you really want to see some kind of wipeout move here to really convince you, oh, this is a top and it's about to get dramatic, because that's what we've been leaning towards for the weekly pullback. So overall with the Qs here, it looks like to me, we're still just squeezing as much time out of this as possible, and eventually this thing's going to tumble. But if we had a moment where we had signals from, say, volatility where that could go wrong, it would be right now, right? With the 2 hour divergence here for volatility, this is what you really had to watch for. And even if you don't think, like, right, I don't think that we are going to squeeze up by another 5% here, but this is the type of signal from the VIX that causes that type of thing to happen, right? I don't think it will. I still think it's low probability, but notice I still took profit on my trades when I see it in some way, so that I see some green come in. I'm still doing good trader behavior. When you see a signal that completely goes against your trade, it's probably a good time to react, is what I've always told myself. So I just wanted to say this before I head out of here. I hope you guys were able to get something helpful from this video, and I hope that this video is enough for you to be able to just enjoy your weekend. I hope that, especially if you're part of Patreon, you understood the messages that were coming out. You understood that, hey, the volatility signal is a risky one for the bears as of Friday's morning, right? So that's why we put it out there. And I just really want to be helpful and try to help you guys manage how this market is actually moving and what seems to be the most probable, and give you guys some good levels to pay attention to, which we did that today. And we'll do that again later on in the week with some updated monthly expected moves. So if you just want to subscribe to get the free monthly expected moves for the SPY and the Qs, if you want to join Patreon to get some extra information and get some weekly expected moves for all these stocks over here that we cover, and get some updated monthly expected moves, it is a great time to join, and it only costs $7. So thank you so much for watching this video. I hope you have a great time this weekend with your family, and peace out.